Most people enter the stock market with a simple dream: put in a little money and pull out a lot of profit. The reality usually looks very different. After the first few trades, losses pile up, confidence drops, fear takes over, and beginners quit. This happens because new traders treat the market like a casino rather than a structured business. They chase immediate returns before they have learned how the system actually works. Today, we are going to fix that. We are going to build your personal trading survival rulebook and journal right now, step by step. Take a moment to pause this video, grab a physical notebook or open a blank spreadsheet, and decide right now what your total available trading capital is. Focus exclusively on protecting your capital and staying in the game for the first few months. Simply surviving this initial phase puts you ahead of the majority of people who enter the market. Step 1 of your rulebook is allocating your survival capital. At the top of your page, write down Rule 1. Input a starting balance that you are completely emotionally comfortable losing. If you have $10,000, maybe you only start with $500. Think of it like walking into a gym for the first time. You start with the empty bar and focus on your form before trying to move heavy weights. Trading requires that exact same discipline. Step 2 is defining your risk and stop-loss limits. Write down Rule 2. Max risk per trade is 1 to 2%. Right below that, write a strict commitment to yourself that you will never execute a trade without setting a hard stop-loss. This chart shows the reality of risk. If trader A risks 50% per trade, 2 bad calls wipe them out completely. If trader B risks 2%, they can take 5 losses and still have over 90% of their capital left. Strictly capping your early capital and risk acts as a mandatory seatbelt. You will make mistakes, but small, controlled losses keep you in the game. Step 3 is implementing a daily trade limit. Write down Rule 3, max trades per day. Pick a hard number and keep it low. For a beginner, 2 or 3 trades a day is plenty. Taking dozens of trades in a single session usually comes from 3 destructive drivers: greed, boredom, or the desire to get revenge on the market after a loss. You don't have to catch every single move. Waiting for a clear setup requires patience, and sometimes deliberately choosing to take no trade at all is the most successful decision of the day. Step 4 is the pre-trade emotion checklist. Before you click buy or sell, you need to answer 3 specific questions. Write these down. Is the setup clear? Is the risk defined? And am I emotional right now? If you feel angry, fearful, or overly excited, your answer to that 3rd question is yes. When that happens, your protocol is simple. Immediately walk away from the screen. You cannot rely on willpower alone in the heat of the moment. Mechanical limits and strict checklists are the only reliable guardrails against your own self-sabotaging instincts. Step 5 is formatting your daily trading journal. Underneath your rules, physically draw a table or create a new tab in your spreadsheet with 5 specific columns. Label these columns exactly like this: entry price, exit price, profit or loss, emotion, and mistake. Tracking your numbers is helpful, but those last 2 columns, emotion and mistake, provide the most critical data points for a beginner to record. After 30 days of logging every trade, reviewing this data will expose hidden toxic habits, like entering late due to a fear of missing out, or ignoring your stop-loss. This journal acts as a diagnostic mirror. It forces you to face your recurring flaws and converts inevitable financial losses into the specific data you need to improve. If you've been following along, you now have a concrete, personalized market survival rulebook to govern your daily decisions. Successful traders are not born. They are simply the beginners who strictly followed their rules long enough to survive the learning curve. If this guide helped you build your foundation, like this video, subscribe to the channel for more operational trading guides, and drop a comment below telling me what daily trade limit you chose. Chasing fast money guarantees failure. Prioritizing consistency guarantees survival, and survival ultimately